Hello, and welcome back to the FinTech Takes podcast. My name is Alex Johnson, and this is Not Fintech Investment Advice. I am joined, as always, by the wise and powerful Simon Taylor. Simon, great to see you. How are you, sir?
I am well. I'm very happy to be back on Not Fintech Investment Advice, my favorite little show in the world, where we just get to give out stuff that's not fintech investment advice and learn about fintech companies and get surprised by your takes, your perspectives. It's so much fun to be back with you, my friend. It's sunny in the UK. It's summer. There's too much to do. The kids won't sleep. All of that's going on. But you know what? Fintech never sleeps either. So
This
let's
is
do
very
this.
true. This is very true. It's funny you say that you're super busy and the kids won't sleep, because that is entirely exactly my experience. However, your sunny, beautiful summer weather, I will see you that and raise you a delightful, sort of cold, rainy summer here in Montana, which is pretty unusual, but we don't have a lot of rain. So while you, I'm sure, are just like horrified by that idea, we've really been enjoying some nice like thunderstorms in the evenings. It's been keeping things cool. It's been magnificent.
Yeah, no, you can have those. I'll take the sunshine. Although it's a lot better than FinTech DevCon's Austin heat, which was just
That's what I
giving fire the
understand.
entire week. Shout
Yes.
out to Wade and all the team at Move that pulled that off, because it's probably my favorite show of the year, just because it's community led and amazing
Yeah.
people. But that was fun.
I heard very good things both about the event and Mr. Taylor about your presentation in particular. So I'm sorry to have missed it, but hopefully we'll get there next year.
I wouldn't
Got
take
to
it
do what you got to
personally.
do.
I wouldn't
All
take
right.
it
Well,
personally.
I appreciate it. I appreciate that. As always, Simon and I are going to bounce around and talk about some fintech companies that have caught our eye recently, and then we'll maybe spend a few minutes at the end trying to manifest some new ideas. Mr. Taylor, would you like to go first?
Sure. I'm going to talk about Revenir. So this is automated tax recovery for travelers. So I don't know if you've ever done shopping in another country, but it turns out a lot of it is tax advantage. It's tax free if
Oh,
you sort of get back to the airport. The problem is getting back to the airport, waiting in line can take forever to take all of those
uh
items you might have bought in another country and sort of get your
huh.
tax refund so you're not double taxed, right?
Huh.
So this is particularly for the United Kingdom and people traveling from the UK into Europe. They would get 20% of their purchases back, which feels like a 20% rebate. So
Yeah.
I would go in from the UK into Spain, Germany, wherever. And when I'm there, I might spend, few £100, few $100 worth on stuff.
Yep.
20% of that back is meaningful. But there are some people who
Yeah.
travel because they know they can get a luxury item or something, a big memento or something to take home that they just like. And people go shopping when they travel. So this is something that the vast majority of people do not take advantage of that tax advantage. So what Revenir does is they help any traveler or business reclaim sales tax when that item would have been exempt. They offer an API for banks and fintech companies to automate that feature for the customers so that
Ah.
the sales rebate could happen, the tax rebate effectively would happen automagically. A user could be notified 48 hours after a purchase that they got their 20% back. Or could you imagine that experience if somebody did this? I go traveling around on vacation. I buy a few things, and then 48 hours later, here's 20% of that back because it was actually tax exempt. That would feel like money in your pocket, right? It would feel surprising and delightful. Now,
Yeah.
up to 80% of items that are eligible go unclaimed on an annual basis. I want this so much that I went and spammed everybody I know at UK neobanks about please try and make this work.
Yeah.
Um, my only worry is this company was founded in 2019 and recently rebranded. And the challenge is that I imagine they've come back to life on a generative AI hype, but can you get,
Mm,
because you need to get evidence from all of the local tax authorities and with the
yeah.
UK tax authority. You need to match those into the right format, submit them, then potentially get an acknowledgement and then refund the consumer. So
Yeah.
the schlep work involved, like I can see how this is actually weirdly a great use case for generative AI. It's like
Sure.
form filling and it's
Yeah.
right most of the time in most cases.
Yeah.
But also, I know a bunch of people who've tried and failed in this in the past, but when I saw it, I was like, God, could you imagine that experience? What are your thoughts?
Well, I love it. I think that one of my favorite categories of fintech is like the found money category, I guess is what you'd call it, right? Which is like, hey, here's this thing that people could get, but there's some nonsense standing in the way of them being able to actually get this money back. And so let's throw technology at that problem and essentially sort of automate their way into claiming money that should be theirs that they're not getting. So love that category. And I think, one of the things we don't talk enough about in fintech, but I love this as a feature, particularly for banks and like using banks as the sort of distribution for this, is I do think there is a really cool benefit that we sometimes miss out on a little bit in terms of like how you can really change your customers' financial health and their trajectory by just putting more money in their pocket, right? Like we spend so much time talking about saving, budgeting, all of these different things. A little bit more money goes a long way for different people. And so I think banks do tend to sort of underestimate the cumulative positive effects of just bumping up that balance sheet a little bit. And so this category of fintech I really like. And I would also imagine, and you'd have to tell me this because I don't have as many sort of going from the UK to continental Europe experiences as you do, but I would have to imagine that this is one of those things that's kind of peripherally something that consumers are aware of, and so, like, when it's presented to them as like, "Hey, this is an easier way for this to work," it's not like, "I need you to explain how this works." It's, "Oh my god, this is great. This is gonna save me a ton of." The normal people will have the same reaction you did in terms of like, "I really want my bank to offer this." Is that a fair assumption?
Yeah, I think so. Especially if it appeared as a surprise at first, like if it just
Mhm.
sort of happened. I
Totally.
don't know that this people are particularly aware of this. Like I'd always seen the lines of people, but it's for the people that have gone and bought like thousands upon thousands worth of
Right.
goods, and they're standing
Right.
in line, or it's businesses that have taken a bunch of stuff
Mhm.
through an airport because it made it easier to. You
Mhm.
just yeah, I always saw that refund line, and I never really put two and two together that like this could be something that would be available to the masses. I thought it was like
Right.
just these extreme weirdos who were spending very high tickets. But
Right.
actually, this democratizes that word again. This democratizes that in kind of an interesting way. So I don't know
Yeah.
that the consumer awareness is really there. Everybody knows there's like duty free shopping and there's that
Sure,
when you're
sure.
in the airport, but nobody thinks about it whilst on vacation and what that means. It's just duty
I
free has
certainly don't.
packaged the tax rebate
Into
situation
the
with the
product
goods
price.
with
Yeah,
into the
yeah.
process. Yeah, that's what they've done.
Yeah. Interesting. Yeah, no, that's a good way of thinking about it, right? Like duty free is this embedded tax benefit that you don't really see, but like it shows up in the price or the ability to buy stuff in a more sort of streamlined fashion. The lines you have to stand in is the manual way that a certain segment of the population does because they understand the game and they're spending enough money to make it worth it. This is sort of filling in that gap that exists in the market. So no, I really like it. I guess two things I would have questions about. One is, I mean, obviously they're working with banks to do this, and so that's cool. And I would never want to try to sell this as a product on its own. This is definitely like a feature that exists within bank products. I think that makes a ton of sense. I do sometimes wonder about the sort of longevity of specific features as companies, even if they get turned into infrastructure, right? Like you build a better mousetrap for one specific thing, but then what do you do next? Like, what's the next like magic trick that you come up with? And maybe this is just expanding the geographic coverage into as many different places and different tax authorities as possible. I could also see a scenario where, I mean, you know the UK neobanks better than I do, but like one of them could just snap this up and make it sort of an exclusive feature within their product or their app. And so I wonder kind of what the long term trajectory looks like. And then the other thing that I see a lot with this category is breakage, right? And so a lot of these things exist as benefits because specifically they factor in a breakage percentage that's pretty high. So most people are not going to do this. Therefore, we are comfortable offering this whatever. But as soon as we automate this and make it something that's easy for everyone, suddenly there's breakage that's not going our way, and we have to adjust what we're doing. Now, I don't think governments think about that quite the same way that like private companies do. The example I always use is the credit card price protection benefit that used
Yeah.
to exist that issuers offered, and then fintech figured out a way to make it easy to spam that benefit, and then it suddenly was capped or it disappeared. I don't think this would qualify into the same area, but I am always kind of curious about when fintech like smashes into like government benefits and tax things, like is there a long-term reshuffling of what these benefits or advantages are when suddenly technology is making it easier to take advantage of? So that would be like a long-term question, but I don't know that I would be concerned about that in the short term.
Yeah, also the cost question, right? So,
Yeah.
can you make it so low cost to do this that you're not as worried about breakage? So,
Right. Right.
if per rebate it actually ended up costing, cents instead of
Yes.
time, standing
Yes.
in line and a broker fee that
Mhm.
takes 5%. You
Yeah.
could imagine. So, the way I understand it is that there are brokers that do this today that charge like a decent percentage, like 5,
Sure.
10%. If you could do
Sure.
it for 1%, 2%, like that's a new
Yeah.
revenue line for the financial
Yeah.
institution. But if
Yeah.
software can reduce the cost of that brokerage element quite
Yeah.
dramatically,
Yeah.
then it's a revenue line and it's software that's really dramatically reduced the cost. I was having a conversation with a VC earlier who was saying that like a lot of the compounding advantage coming to some of the big software platforms in the age of AI is now after cloud, it's that next great cost takeout. You know, software and cloud and mobile become this great cost takeout set of structures. AI is already performing as this big cost takeout where the benefit is accruing to those that can use it and that have good engineering talent. And I was like,
Yeah.
that's just a really clean way of saying what I think a lot of people see. And I really
Mhm.
enjoyed that way of framing it. This could be one just small example of that.
Yeah, no, I agree with that, and I also think, going back to your point about, like, how AI plugs into this, I think the trick with this stuff is you definitely want to, I think, leverage AI to pull some of the costs out of this, but I also always think with AI, like, if this sucks out 100% or close to of the cost or the manual work that goes into this, what's the moat that you're building behind yourself so that other people
Right.
can't come in and do it? And I do wonder with this, is it this sort of interface and relationship and sort of knowledge of each of the tax authorities around this particular area in different geographies? Like, is that the moat? Like, I
Yeah, I
would
think
want
it's
to think
coverage.
about its coverage, right? Yeah, like coverage of those different geographies and sort of a specific knowledge of this particular part of the tax code. I mean, I would assume it's something along those lines, right?
Moody's acquired a company called Count, I think it was. I might have gotten their name wrong. It might have been
No, I
somebody
remember
else.
that. Yeah, yeah.
Yeah, and they have access to the equivalent of the Secretary of State for
Mm,
like 200 countries. So they
right.
do a small fragment of the KYB check is to check that this is a
Mhm.
real registered business, and
But
they
they
do
have
that.
like such great coverage of everything for that one little thing.
Right, and so that's kind of what they sell themselves on, and it's one
Yep.
piece of a wider package. You can never have that
Yeah.
alone. But
Yep.
actually, this in that scenario makes a great deal of sense. So who knows?
Yeah.
I've made a couple of inquiries. I want to talk to them, and I want to figure out how real this is. But even conceptually, like just the insight of like found money and this cross-border type of found money
Oh,
was
yeah.
like a combo that I hadn't seen before.
No, I love it. The found money cross-border is a really interesting combination, and we've definitely seen a lot of neobanks and others really make quite a living kind of catering to that cross-border population. So, no, I really like it. Simon, can I give you my first company?
Please do.
All right, so mine is a company called Summer, and
So
they are summer, just like the season that we're hopefully gonna stay in for a
that
little
I was
while
going to say
longer.
that is a great choice, sir.
Thank
I
you.
know a lot of
I
people
when I
that
saw
are
the name, I
like
was
trying
like,
to get ready for fall. They're bringing out their autumnal
my
colors.
wife is doing this. She's adding pumpkin spice to things already. I'm like, "No, woman, we still have time. Don't push
Somebody
us
was
there
adding
yet."
nutmeg to something I saw earlier and was like getting
No,
excited about Christmas, and I went, please,
no. It'll be here
buff.
before we know it. Let's just wait. Let's stay in summer. So, along those lines then, staying in summer, summer is they describe themselves as a comprehensive student loan and education assistance solution. So the basic idea is that they provide a set of products and sort of educational resources for college graduates who have student loans to be able to sort of optimize and take advantage of all of the different many programs that exist to help you pay down your student loan faster, to get portions of your student loan forgiven. They basically sort of productize all of those many different benefits and sort of
Yeah,
obscure strategies for sort of paying down or dealing with your student loans. They productize all of that and they deliver it as a benefit through the HR department at companies. And so the thing I was intrigued by with Summer, and the reason they popped up on my radar screen is that they recently made an acquisition of another company that's kind of in this space, and so they seem to be sort of consolidating this sort of large scale student lending platform benefit for employees. I've spent a lot of time over the years, and I think probably Simon, you have too, thinking about the different distribution channels for fintech. And obviously, you can go direct, you can go through banks, as we were just talking about. You can go through merchants, which is the whole sort of buy now, pay later, embedded finance category, or you can go through employers, and there's sort of fintech as a benefit. And what I've been fascinated by is that this was like an idea that got a lot of traction and got a lot of people really excited. What, like 3 to 5 years ago, something in that general range? I kind of remember like right before and during the pandemic, people were very excited about that. And then it kind of died down a little bit. And what I've heard from a number of people is that selling to HR departments is really hard. Like you think selling to banks is hard, or going and doing like hand to hand combat to acquire consumers directly is hard. Selling to HR departments is really hard because they don't have any budget. It's not seen as a strategic priority inside the company. The companies don't really care about doing it. A lot of things they sort of expect to be able to get for free or to get very cheaply. The largest employers like an Amazon or Walmart do all this stuff themselves. And so it's actually a really cool concept theoretically, but really hard to make work in practice. And so I've been trying to think about what are the exceptions to that, right? Like I think generally it is hard, but where are the like exceptions where a good wedge product can make traction with a specific category of employers? And so my thesis, Mr. Taylor, and I'd love your take on this, is that if earned wage access is a great wedge product for employers that employ lower income hourly workers that need to get access to funds faster than a 2 week pay cycle, and that's the sort of breakthrough product that gets traction in that market, is it possible that student loan oriented products are the breakthrough or wedge product for employers with higher salaried employees who are likely to be carrying large amounts of debt? What are your thoughts on this?
yeah. Especially who's hiring recent grads, last 2 3 year grads.
Yes.
I did a piece of work with a design agency not long ago that described essentially like the working Gen Z and working millennial population that earn six figures as angsters, just
Ooh, that's a good
angsty.
one.
They're just
Yeah, they're
angsty.
very angsty. Yeah,
And the reason for that is it was like a build on the high earning, not yet rich, which was uh, on paper you're high earning, but actually in real terms you're 20% back on where you were pre-pandemic. And
totally.
so like your cost of living is insane. And
Yep.
your student loan, especially at the younger end, is still absolutely wild how
Yeah.
expensive that is to deal with.
Yeah.
So you've kind of got this like double whammy of you on paper are doing absolutely fine. You might be mid to late 20s. You made it
Yep.
to six figures already. Like
Yep. Great.
10
Good
years
for you.
ago,
Yeah.
home run.
Mm-hmm.
Like,
Yep.
well done. My goodness, you're going to go off and run. These people are absolutely drowning in just cost of living. And
Yeah.
we saw it with millennials. We're seeing it with Gen Z. Oh, you're not good enough at saving, and oh, you've had too many coffees. And like, sure, there's a bit of that. Like,
Yeah.
but
Like there
this
is with every
pain,
generation. Yeah.
but the cost is really high on a relative basis. And
Totally.
the student loan, how painful is that bit of the deduction from the paycheck feel on a
Yeah.
regular
Yeah.
basis? And
Yeah.
it's sort of coming back to this found money thing is like, how much is injecting that strategy going to make a difference to employees? But to your point, how much does the HR team believe that's going to be worth their while as part of their overall package and make
Yes.
them competitive? And I think
Yes.
that second order question is the big one is like, could this be the wedge for that user? Yes, but I almost wonder if you have to go direct because a lot of earned wage access did quite well going
Going direct.
semi-direct and it's like the Slack model, the bottom-up acquisition where you get the staff and then you convert the staff into
Yep.
a corporate version. So that bottom up SaaS, but bottom up
Mm.
fintech. There's a
Mm-hmm.
phrase. Bottom up fintech
I like it.
could be the way in here. So I thought about that. Um,
Uh-huh.
so I don't know. Do you think like enough people are students that Summer could acquire, or is there only go to market here via HR?
Yeah, I mean, it's a really great question. I wonder about that because I'm grown to be very skeptical about the ability to sell to HR. And there's two components to it. One is I don't think HR is given really any budget by the company, nor are they seen as like a strategic lever for the company. That's just not
Yeah.
like it probably should be seen that way, but it's not. Shout out to Heba Youssef who writes "I Hate It Here," which is a newsletter on all things HR. Like we see you, it's a hard. I understand, and I
Yeah.
think the other part is that you know the question of acquisition and retention as an HR priority inside of companies, it kind of waxes and wanes, right? And so I do think that, if you look at like earned wage access, to the extent that the employer sponsored or employer integrated model has worked or has taken off, the reason for that, I think, largely is because it just so happened to coincide with the pandemic and the fact that actually employees at the sort of lower end of the salary continuum, that's where a lot of the wage growth has happened over the last couple of years. It's been fiercely competitive to try to hang on to hourly employees. You have industries like fast food where you just can't hire enough and you have to raise costs. And so if you're in a huge crunch for hiring these people, then I think fintech has a benefit that basically allows you to sort of say, well, we don't pay, $35 an hour, but we do offer these other benefits. Then that investment, starts to make sense. The challenge I have with this one, kind of Simon, to your point, is I haven't really gotten the sense talking to people that the college educated crowd, new graduates, are getting snapped up quite the way they used to, right? Like if the employment gains are happening kind of at the bottom of the ladder, which is great, some of the cost of that is coming out at the higher end. And we see this in tech with layoffs. We see it in all kinds of different places. So I do wonder if there's that same impetus or incentive to be like, oh God, we got to invest in something to make it easier to hire or to retain these employees. I don't think that's probably true. So to your point, going direct or semi-direct to the students, the graduates, that's an intriguing proposition. And it kind of reminds me of the old days when, prior to the Card Act, issuers would go like directly onto campus almost and
Yeah.
would try to get them like while they're in school or just when they're getting out of school. It also a little bit harkens back to the early days of SoFi.
Yep.
and this is just kind of a different sort of model for that. So I do think there probably is a more kind of semi-direct way to attack it. And then, looking at their website, it does seem like they also have employer facing products. So like, hey, if you want to help contribute to, your employees being able to pay down their student loans faster or whatever, they have sort of an employer set of products. But I do think this consumer facing direct option is one they should probably be considering if they're not already.
Makes sense, doesn't it? The SoFi thing was going through my mind as you were saying it, as was
Hmm.
a company in the UK called Prograd that works with a lot of the student bodies around sort of debt management. And the sort of Prograd is like Nerd Wallet plus students
Hmm.
plus like kind of all put together, but put in place. I thought that was quite neat. Similar sort of idea though. It's strategies for dealing with debt and finance. Uh, the other thing, as you were talking, that came to me is, it is this not a part of a future rippling marketplace or a gusto marketplace? Like, actually, are the HR platforms not your ideal channel partners here? And what's their upside as a channel partner? Because
Yeah.
channel partners that want to co-sell, resell, whatever,
Yep.
are a weapon. They are a
Yep.
weapon that can just, if you get that right, it can make such a massive difference to your business. That
Yeah.
it's you start coming on in seven-figure leaps instead of six-figure leaps very, very quickly, as they bring more and more, because their sales teams are much bigger than yours. And if they really see this and it's selling well, then
Yeah.
they'll push it. Again, I've worked with people at some of the largest legacy brands and largest fintech companies in that space, and I've seen once that machine gets going, it's awesome to watch. It really is. So maybe that's another route.
I like that one. I like that one. The other one I was thinking about was kind of in the vein of, might this someday be acquired by someone? This could make sense for someone like a SoFi, right? Like Chime just bought Salt Labs as a way to kind of get into the
Yeah,
employee benefit, earned wage access area for their target segment. And I do wonder if there is like a bank or a neobank that targets more of this population, but wants to kind of add that employer angle to it. So yeah, I think there are different places in the market where something like this could fit. It's just kind of a question of what's the best distribution strategy. All right, Simon, your second company, if you would be so kind.
my second company is Jeff. Great name. Just
It's a great
let's
name.
take a let's just give that a moment. So I describe this as FICO for the global south. So they use
Ooh.
non-traditional data sources to provide credit to underbanked and unbanked populations of Asia. Asia Pacific is kind of their core market. So the service just needs a user email address and a phone number. And then, this is near and dear to my heart, uses signals like user behavior, device details, IP address, any social media they can to build like this in depth client profile. And then they match those with lenders who want to serve that user based on that score that they give to the user. And they already have a marketplace of banks and telcos and wallets and insurance companies that can not only use this data, they can share it amongst each other across the Jeff marketplace. Hence the FICO thing. It's like maybe
Yeah.
it's more Experian or Equifax, but the score
Yeah.
side of it really struck me as a FICO. You're closer to that and will probably educate me. But I liked the data marketplace. I liked that it was very simple on the front in the phone number and the email address linked it to all of the social and e-commerce accounts, and then they're using device and behavior as the anchor. So that's powerful. For example, they give away one statistic on their website that a user has who has a LinkedIn account is 15% more likely to repay a loan than one does not, just for one specific lender.
Yep.
As anybody who's done statistics knows, and anybody who's worked in data knows, that was true for that one lender at that point in time, and it was one data point, and it should be seen in aggregate. Caveat, caveat, caveat. Point
Sure.
being, there's a lot of people that have experimented with social data, or they've
Yep.
experimented with, like individual data points. But what you do for fraud and AML is you go look at as many data points as you can, and you build this 360 perspective of a user
Mm,
pre onboarding. You look at them before they've even submitted almost anything. You're trying to get as much as you can so that you can reduce the friction of onboarding them, but also you're gathering all of that data to make a better decision. Now, in the US, with lending, fair lending, and a lot of the credit reporting rules means you're sort of limited to what data you can gather for what lending use case. But in Asia Pacific, you're not. And
yeah.
actually, these not only are these thin files, they're all no credit files. So how do you lend in that space? And I've been speaking to this founder of a business called Copa does this in Africa. And what they do is they'll give away a prepaid phone and then watch the usage on that device to start to build credit for it. And then the usage of that device over time makes somebody economically active. And then they start to build a credit line that lets them pay for multiple utilities and services. So the thing I keep coming back to is user device and behavior becomes this like really consistent set of data signals. But
Yep.
actually, if you turn them into a score, if you turn them into a marketplace, that's when they become like 1,000 times more powerful. So, uh, great name, great
Great
idea,
name.
great part of the world to be operating in, and solving problems in a non-traditional way. So, I like bringing you an international perspective, Alex.
I appreciate that, sir. I'm hopelessly US centric, and so I count on you for this. So thank you. Really interesting. I agree, I think, with everything that you said. The interesting thing to me about this is it would appear, and tell me if this isn't right, but it would appear that the general idea is, hey, we can provide a set of benefits to you, whatever platform is working with a set of users in these markets, to help you better understand your users. So we can check their online profiles, we can give you sort of a deeper view into the digital footprint of your users. And so, like, the first level of benefit is, hey, if you're a platform provider that works with customers in these markets, you should work with us because we can give you a deeper view into your users. And that can be used to look for fraud. That can be used to help you sort of better segment your audience, be able to target them better. So they provide sort of a digital footprint analysis type of service for platform providers. But, and again, this is me sort of speculating a little bit here, the sort of secondary benefit or the sort of larger network is we can then create opportunities by getting a view into all of these users for what they might be qualified for from a lending perspective or for other services. And so other providers that are a part of this network can then be able to offer loans or other types of products to these users based on, again, our score and our understanding of that sort of digital footprint. Is that, am I describing the model in broad strokes
It's
somewhat right,
less
or am
of
I getting that
a
wrong?
you could cross sell to somebody else. It's
Hmm.
more if that person walks through your front door, you can get the
Mm,
data you need and a score on them based on what we've
mm,
seen before, not just in our network, but by inquiring with everybody else who's in our network. So
got
it
it.
might not just be that we've not seen them before as the network, but that one of the insurance companies somebody has, and they're willing to sort of put in the little bit of data that they have in return for some level of compensation. So it's a true
Yeah,
marketplace in that
yeah.
sense, to so that they can be onboarded somewhere else. And in return, when that other company is looking to onboard a new user, they could go to the device and the behavior and all of the things that Jeff pulls in by itself, plus anything that any of the marketplace members also has. So
I see. I
I
see.
mean,
That makes sense.
bluntly, it
No,
looks
that
like
makes sense.
sardine plus sonar, right? Like it's the combination of the two, but it's applied to
Yeah.
credit and it's applied to Asia Pacific and it's applied to unbanked. And those three things make it, I think, really, really fascinating.
Yeah, no, it's super interesting. I mean, it definitely reminds me of, or makes me think of, like, I like to ask this question a lot, but like, if FICO or the credit bureaus were starting today, what would they do and how would they work?
Bullseye.
And this is a really good example, I think, of like, hey, if you got to start from scratch today, and this goes back to your point about the signals and what it kind of means from a data science perspective. I think generally what I've seen, and I have spent some time in this world over my career, is that there's all kinds of signals that you can get that actually tell you a lot about what consumers are going to do, right? And the restrictions that we have in certain markets as to what data you can use and what you can't use, that's more about the society, their sort of history of laws around this, what they consider to be fair or not. It's not a data science question. Like, from a data science question, the more data, the better. And almost every signal you can get about how users behave tells you something. And so I do think, yeah, if you were starting a credit bureau or credit scoring service from scratch today, you would try to build it in a market where you don't have those restrictions, so you can get as much data as possible, and where you could really add a lot of value in terms of addressing that underbanked concern. And the other thing that I think is really interesting to think about, like, what would FICO do if they were starting from scratch today?
Yeah.
FICO wouldn't just create a credit score. They would create a credit score and a marketplace in the style of like a Credit Karma, or, what Experian is doing now with some of their stuff. Like, the natural product add-on is a marketplace to sell credit, not just a score to evaluate credit. And so bundling those things together, I think, makes a ton of sense. And then the other thing that's really interesting with all of this is I've been very fascinated by how segmented apart from each other fraud and credit are in the US and in other advanced or more mature marketplaces. And I think that's because when credit evaluation was getting its start, fraud wasn't the same type of problem that it is today. And
Yeah.
so fraud and credit kind of grew up separate from each other, and they sort of had sort of an interesting relationship between the two. I'm sure you see that at Sardine all the time. But again, if you're starting from scratch with a blank piece of paper, fraud and credit are the same problem, and they're just different degrees of what you're evaluating. It's the same data set.
And you'll see that like Alloy actually does workflow for both, and that makes
Right,
complete sense.
exactly.
I think
Yeah.
Tactile does workflow for both. Like
Yes.
if you're purely at the workflow level, you can kind of do it across both because there are so many similarities in the underlying workflows. It's the data sources and the regulation that kind of comes underneath it. But no, I mean,
That's right.
I see it in the day job. We're getting pulled in that direction as well, and we'll probably
Mhm.
inevitably end up over there. And that's the similarity of the more data I can get, the more I trust that data, the higher its quality, then the better analysis I can do to get closer to the truth and
Yep.
make a better decision within the realms of the law and fairness and whatever else. If I can service people with that, and then I can use that data, kind of in a marketplace, that gets hugely valuable. But to your point, what if you layered over the top of that not just a data marketplace, but a lending marketplace? I don't think Jeff does that, but it would be interesting.
Yeah, it's definitely a direction to consider. The other thing I would just toss out as a warning, I suppose, is you do see other examples of sort of novel approaches to underwriting and credit evaluation and lending take hold in other markets where regulations don't restrict certain practices or certain types of data. The thing you have to be really careful about is, even though regulations might not restrict certain things, you want to hold yourself to a higher standard oftentimes than what the regulations require.
Yes.
Because if you do something with a novel use of data or access to a smartphone or what have you that causes consumer harm, even if you're not breaking any laws, you will get smacked down by regulators. And we've seen this in tons of countries around the world. We've seen it in sub-Saharan Africa, we've seen it in the Philippines. These things happen where we go in and say, hey, like, just as an example, there's really no law on the books restricting us from texting every one of your contacts in your phone if you're late in paying your bill, so that we can shame you into repaying us. And that can be a very effective collections technique, but it's also really crappy behavior that's terrible for users. And
Yes.
we've already seen lots of governments around the world go, whoop, nope, sorry, we didn't think about that before. But now that we see that, we are absolutely not going to let you do that. And not only are we not going to let you do that, but now you're on our bad list, not on our good list. And so I do
Yeah.
think when you contemplate these types of models, you really need to orient towards benefit to users and really hold yourself to a high standard in terms of anything that lenders or businesses might want to do that would be bad for consumers, because regulation does catch up eventually, even if it's not there in place today.
100%, my friend. Regulation always gets you. You gotta get the incentives right from the beginning. Otherwise, it's an inevitable consequence of bad incentives create bad outcomes. Bad
Yes.
outcomes create bad events. Bad events create pushback from society in which something must be done, and that something is usually regulation.
Yeah, and there's no patience for like, "Oh, well, this wasn't against the law at the time." Like, people don't care to hear that answer, and so that, I think, is definitely a consideration for building around these types of models, but I love the general approach. Simon, I'm gonna give you my last company, if that's okay.
Please, please do. I'm excited for this one.
Okay.
Hit me. Hit me.
Well, so I am excited to you might have already come across this company. It's a company called Axle,
Ah, yeah, yeah, yeah,
and
yeah, yeah.
you know
Oh, it
them,
was
I
gonna be one
assume.
of my suggestions, actually.
Really?
Funnily
Was
enough,
it? Okay,
let me see
so
if I can
I
find my notes on Axel.
you bring up your notes. I will narrate while you bring up all the smart thoughts on the general thing. What they do, they offer AI agents that automate manual workflows for compliance operations teams, uh, and it's obviously I think an area that lots of people are building in. It's a very obvious benefit of being able to throw generative AI and AI powered agents at a problem, right? Compliance workflows have a lot of manual steps. They have a lot of work that makes human beings want to kill themselves. And so being able to take that work off of people's shoulders, I think is a pretty obvious place to start when it comes to applying some of this stuff. One of the things I thought was interesting about Axel specifically, and maybe this is just a marketing thing, or maybe this really sort of filters into how the product works, is they present their capabilities as meet your AI digital workers. And they've
Yeah.
actually branded each of the individual workers. So there's Bailey, who does sanction screening. There's Sam, who does SAR analysis. There's
Uh-huh.
Rose, who does transaction screening analysis. There's Justin, who's your KYB, KYC analyst. So they have sort of tuned generative AI agents for each of those specific, I guess, compliance workflows. And I think that's a pretty clever way, at least on a marketing level, of kind of branding your product, and potentially from a product level in terms of kind of really getting the exact workflows and data and patterns nailed down for each one of these different jobs. Because it's not enough to say, oh, we have AI for compliance. You have to be able to answer in pretty granular detail, what compliance tasks do you help us with? Do you understand the nature exactly of what all of our human beings do in those jobs? And where can your AI agents add value? And probably not replace, because I don't think you'd ever want AI making compliance decisions or determinations, but where can they do a first pass and take a lot of the manual work out? Now, Simon, I want to hear all of your notes about this specific company, but I also want to frame a larger question back to you, which is, I think you maybe didn't mention Axel or other companies in this space because you've written a ton in your newsletter about this exact category. And
Uh-huh.
I think I've lost track of the number of companies that are doing generative AI for compliance operations. So I'd love your take on what wins in this space. Like, what is the category or the product or the killer feature that sort of stands out that causes someone to rise to the top here, because this is a very, very crowded category all of a sudden.
It is. So this will probably be one of the ones I write up for the 25th of August. Like I'd already written it up. It was just I had a switcheroo because the version of Brain Food that I put this in, which was more evergreen, spoiler alert, was called "Why Doesn't the USA Have a New Bank?" But then
Hey,
this week, the whole broker deposits thing happened, and I
it did.
had to figure it out. So I was like, I don't understand this. I'm gonna go research it, and whenever something's timely, you kind of got to bring that to the front of the line. How
Yes.
Simon creates content aside, yes, I've written a lot about this space. disclaimer, I invested in a company called Casca. They do essentially agent-like work for loan origination, and
Mhm.
they by all accounts doing extremely well. And so a lot of that is in the communication with customers and the document collection and the Schlepp
Yeah.
work, right?
Yeah.
And there's momentum. There's real momentum because there's a lot of folks out there with this challenge. The interesting thing about it is who buys this and how many of them buy it, because it's a
Yeah.
great signal to get live, and then can you keep your product velocity beyond this thing to go
Yeah.
solve a whole bunch more problems? Because there is no question this is a wedge, and there is no question if it solves enough of a pain point, you'll get the sale. But
Yeah.
then what and why and where does all of this stuff play out? So,
Mhm.
Axel has several use cases they already solve for. Uh, I would not be surprised. I know Sardine has nearly all of these features already in the platform. I would
Yep.
not be surprised if its competitors do as well. I just haven't paid attention. But again, the conversation comes to who owns the workflow. So Packy McCormick wrote a great piece on Ramp recently, and he was like, uh, going. His core question was, "Who owns the workflow?" Because if a
Yeah.
company is sufficiently good at software engineering, they can become sufficiently good at generative AI, and it just
Yeah.
creates a compounding effect.
Mhm.
They become a compounder, right? They own the financial services workflow, so by adding AI to it, they just go deeper into the organization and save you more time and more money. They're just using a
Yeah.
different tool to do it. So
Mhm.
who owns that workflow? And who owns it for which type of client, which buyer persona?
Yeah.
And so I think there are these sort of platforms that emerge.
Mhm.
Classic example, Stripe. Really big, does everything for you, does it all in SaaS, and if you're a brand new company, you probably go to Stripe first. And sometimes that brand new company is OpenAI and is doing 3.4 billion in revenue within a couple of years of its life.
Right.
That's a great space to be indexed to grow when the market grows, and to
Mhm.
kind of have a piece of it. Versus these generative AI companies that solve for compliance, just that use case, tend to sell mostly to incumbents, interestingly.
Yeah. Yeah.
I haven't seen the fintech companies falling over themselves to buy this specific, and I could be wrong. I haven't seen it. And when I speak to founders, CEOs, they're saying they're not necessarily buying that as well.
Yeah.
But, there's could be my bias, could be a context bubble. Founders of these companies, please do reach out to me. But everything I've seen in this space has been what Sarah Hinkfuss called the sustaining innovation. An
Yeah. Yeah.
incumbent that could not do this anyway gets to do it because the, with a really clear use case, a large organization knows what they're buying because they don't know how to buy platforms. And if they had to buy a platform, then they start thinking about all of the internal tools that they have to start displacing, and RFIs and
Mhm.
RFPs and rip and replace, and you get into that headspace. So you're almost, to incumbents, you're better selling a feature and a use case. To uh, business technology businesses, the more of a platform you can be without being too much of one, if you're selling to enterprise, is kind of a better sweet spot. So
Mm.
there was the old question, what if Stripe builds it? Sometimes people ask, what if Plaid builds it? I
Yeah.
think the answer is they will, right? They
Yeah.
will build this stuff, and a lot of the compliance platforms will build this too. But
Yeah.
there is a market in just being really clean to the use case around a wedge product that could play out. The question
Yep.
is, how do you ladder from that to be, okay, you got some community banks and you got a few use cases and you got some traction. Do you have product market fit for this? Okay, great. You got product market fit. Can it scale into a business? And what business does it become? Which are the right questions to ask of a seed A and B stage company. This is at seed.
Mhm.
Can you get traction? I think they can, and I think they will. The question is that buyer persona, can you get enough scale with them? Now, if I'm an FIS, a FIServ, something like
Yeah.
this looks really juicy. Something like this looks like, okay, I've got all of my clients, but they're all asking me about AI. Boom. Here this is. So I think it goes that route, but this is, what, the 16th of August 2024. Who knows where we'll be tomorrow?
Well, I think you're right, and the buyer persona thing is, to me, the most interesting question here because, to your point, if you're like a fintech company, you don't really want to buy something like this, and I think the reason is actually pretty simple, which is you don't have the scale to have this problem, right? Like generative AI agents that take a lot of the manual work out of compliance processes really only add value if those compliance processes are overburdened by a ton of cases that they have to review and a ton of things they have to manage. And so if you're a sufficiently small-ish fintech company, I'm sure your business is going great, but you don't have a compliance workflow queue with uh, you know, 1,000 cases that you need to get through and overworked analysts. Like, that's just not the problem for a lot of these earlier stage fintech companies, who also, by the way, have probably built their own pretty slick compliance systems and workflow processing to handle a lot of this in a fairly automated fashion. And so you're probably pretty comfortable saying, I don't really think this would add a lot of value to what I'm doing. The second category of potential buyers would be more scaled up fintech companies or other financial services providers who are using modern ish systems to manage some of this stuff. So you could use like Hummingbird, I guess, as an example of like sort of a compliance workflow platform. Uh, Fairly modern, but used by companies that have scaled to a certain size and sort of need to invest in the right infrastructure. You could target that segment of the market. And, the benefit I think would be your stuff would probably plug in very nicely with more modern technology that's used for compliance workflow management. And the companies that you're selling to, you wouldn't have to explain generative AI. Like, they would get it, they would understand what you're doing. It would be probably an easier sale. However, I think, Simon, to your earlier point, the Hummingbird's going to build this, right? All of the platform providers that have more kind of modern-ish, capabilities, they're all right on this AI train. They're going to catch right up in this area. There's not really going to be a lot of room to differentiate there, and they already have captured the workflow part of the business. The compliance analysts that work at these companies, they like whatever system they're using. I think one of the most important things to remember when it comes to like thinking about workflows, and I think Packy makes a great point about Ramp, is employees love the systems that they get used to, even if the systems objectively aren't perfect at everything or have gaps. Because once you're knowledgeable in how to use a system, you don't want it ripped out of your hands, right? Like, this is the Excel thing. This is why Microsoft Word and Microsoft PowerPoint still stick around. Like, once you've mastered a system, no matter how much it sucks, you love that system and you treasure the knowledge you have and the competency you have in using it. And so someone coming and taking away your favorite toy and replacing it with something new, not going to go well. And so those workflow systems are very, very sticky, and they tend to stick around inside these companies. I agree with you that the best place to go with something like this is to scaled up companies, banks, other types of financial services providers that have a lot of manual compliance work that they're doing, where you can add a lot of value, and where the systems they use, the workflow systems that they use to manage all of these compliance processes, are old. And where someone like an FIS or a Fiserv, they're not at all going to be anywhere close to figuring out how to apply generative AI to this stuff. And your product as a feature within those larger systems, whether you do that through partnerships or integrations or plugging into their marketplaces that they're building or being acquired by one of them, you're going to stand out, and you're going to be like a standout kick-ass feature within those systems. You're not moving someone's cheese, you're not taking their system away from them, but you are making it significantly better to use. To me, that's the corner of the market that you want to attack. And Simon, I'd be curious for your quick take on this. I have noticed that seed stage companies in fintech have an aversion to even thinking about selling to those types of banks and selling through those types of core system providers, because it's such a cultural mishmash of like, you have to go, you have to explain what you're doing. Like, it's way harder to sell there than it is to the more sort of sophisticated corner of the market. But I think there's more opportunity selling to the people who are the furthest behind here. What do you think?
Yeah, there's an art to it, and I think if you can do it, then there's money. Again,
Yes.
disclaimer, disclosure, I invested in Casca, but one of
Yeah.
the reasons I did is because Lucas, the founder, had worked in core banking software sales,
Yeah. So
right?
he
So
knows it.
he knew how to speak to these people. He knew
Yeah.
what their value drivers were. He knew how to articulate things, and he knew what their budgets were.
And the
And
sales cycles. Yeah.
the sales cycles with a lot of them, and that
Yeah.
you gotta almost have that portfolio of things where one of them could kind of drop, and then you can kind of ladder them and use that one that you've got a POC with to get this one to a POC, so that that one goes to a pilot, so that you've always got to be laddering in this space, and you've always got to be educating. Like,
Yes.
the sales job is actually for this segment is more education than it is anything else, and then it's dealing with objections, because they want what you're selling. It's like, we will take away manual work. Okay, now here's 1,001 objections. Help me overcome all of these, and we'll
Yes.
get somewhere. And
Yes.
so that's kind of the key. If you can do it, there's money to be made. And then, as I alluded to earlier in the show, building a channel partnership does take multiple years. But if
Yeah.
you have traction with some institutions, that becomes something that you can then ladder into. Okay,
Yeah.
but we can go do this. This is worth your time. It becomes worth your time going to speak to those institutions. And once you do, that becomes like a whole space of the market that's just all yours. And your worst case scenario is potentially some kind of M&A exit. And
Yep.
better case, you go on and become this whole other thing. But as you were talking about channel partners, the other one that came to my mind was Nice Actimize, the
Yeah.
Verafins of the world. Like, all of those
Yeah.
guys would be kind of prime position for this. Then they're the platforms of the incumbents for compliance
Yes.
that Hummingbird is trying to dislodge, but
Yeah. That's a hard sale. That's a really hard process to get over the hump on. I mean, it takes decades, honestly.
it would take them decades. But the nicest of the world could add this, and then boom,
Yes.
there's a short term business case for it. So it's sustaining innovation, but so is RPA, and UiPath is what, a 30 odd $1 billion company. Like,
That's right.
there's nothing to sniff at.
There's nothing wrong with sustaining innovation. I mean, I feel like that's we should have t-shirts made. There's nothing wrong with sustaining innovation. Like, it can be a great business to build. Might not be quite as sexy, and again, like, it requires you being very patient and explaining to enterprise customers and enterprise channel partners how this works, why it's safe, why no, this isn't going to hallucinate, blah blah blah. Like, whatever the things are that you have to answer for the 900th time, and it's super annoying, but like, you have to suppress your annoyance around those things and go in these places because it's where you can
Uh,
add the most value. So no, I think that's exactly right. Simon, it's time.
Is it manifesting time?
Let's manifest. Let's manifest. Let's manifest some ideas. Would you like to go first, or would you like me to go first?
Yeah, I got one that I've been throwing out the last few weeks
Okay.
that sounds really simple. It's like, imagine if payments in the
Hmm.
United States just worked via any rail and did not cost a fee. So I could send money from Zelle to Cash App, from Cash App to anywhere else, and they were just interoperable. Like, what if that worked and somebody was willing to take the hit of the difficulty of all of that because they had some other proposition over the top of it? And that bought them the ability to do a lot more. I got this idea kind of rolling through the why is there no new bank for the US model, and I had two insights from writing that. One is nobody's targeted the youngsters, the affluent, six-figure salaried neobank. Just Cash App isn't really there. I
No.
think Current's trying to get there, but it isn't. But if you look at the neobanks, neobanks are a byword for consumer low-income populations in the United States. They just haven't done well in the prime segment. But in the UK, that's just completely different. In a lot of the world, it's becoming increasingly different. So you can solve for this space, but you have to solve that uh, everyday speed bump. And you
Eh,
look at the financial services speed bump. of everyday Americans, and there's like a lot of them. But
Yeah.
the most everyday is like, gee, I'll just send you a check. It's
Yeah.
still it's still just the way out. Sometimes it's the
Yeah.
only way. Solve that, and then you can do everything else. That's my manifesting.
That's a good one. I like that one. I do think there is something to the idea of trying to think the way to frame this like hypothesis, but there are certain areas where you almost are like there's like a devil sitting on your shoulder and it's like do this in a proprietary way, don't make it interoperable, like, so you know what I mean, like there are certain areas in financial services where you might have this really interoperable, we're going to be open, we're going to have this like sort of very well
The
integrated
Dilbert
approach.
comic.
Yeah, and then you go into the space and you see how the business works and you see the unit economics of the different models and you're like, "No, we're gonna do it in a proprietary closed loop way." And payments is the most that way, I think, of almost anything where it just tempts people into trying to control the market rather than trying to integrate the market. And
Yeah.
so I do wonder if there is, yeah, someone who can just resist the temptation to fall into that trap and just be like, nope, we're going to stay anchored on interoperability and enable this stuff to work at scale. Because you're right. I mean, checks stick around because they work everywhere and they're totally interoperable. And it's a piece I want to write some point in the future is like, what are all the good things about checks that we sort of take for granted? But it does touch on that kind of core point that they work in a way almost no other payment rail does.
So I think the opportunity is with wallets, right? So
Yeah, you've talked about
we're
this before.
moving from a world of what's in your wallet to which wallet do you use?
Yes.
And as we move towards Apple Pay, as we move towards Shop, as we move towards like Stripe Link potentially, or sort of
Yeah.
whatever the hell Fastlane becomes, and all
Yeah.
those sorts of things, we're moving away from what's in your wallet to which wallet do you use, which one contains your identity. I think Clear is the dark horse in that. Like, could
Oh, I
play really
agree.
well.
Yeah.
So, anyways, manifest for me, sir.
All right. Mine is born of a personal frustration that I've encountered recently when I was trying to freeze my credit reports and the credit reports of my wife and kids. And I obviously come out of the sort of credit scoring, credit bureau world, so I'm not unfamiliar with it. But I hadn't tried, maybe at least in a long time, to freeze my credit report. It was outrageously difficult. You have to go to each one of the three credit bureaus individually. You have to create an account and fill out a whole thing to sort of find your identity within the credit file. And you have to hope that that process works because at two of the three bureaus, it didn't work. Mysteriously, their system was down. The page that they had for that wasn't loading on their website. I'm sure it was just a coincidence and not something where they were intentionally trying to stop me from freezing my credit report. I'm sure it was just, in fact, Equifax was like, yeah, our website is not working right now, but you can call our call center. And then I called the call center and the call center was down and they weren't working either, Simon. It was just remarkable. So, and then the third one, Experian, it did work, but then they tried to cross sell me their $25 a month larger consumer facing subscription fraud management magical solution instead of just easily letting me freeze my credit file. It is not easy, even though I am guaranteed by federal law the ability to freeze my credit report. So, the thing I would like to manifest, Mr. Taylor, is a single service, ideally an app that I can have on my phone, that would allow me, with the push of a button, to get free copies of all of my credit reports, to get free copies of my scores, both Vantage Score and FICO Score, because it's my data. So give me as many of these free copies as I want. It doesn't cost you anything extra to give me as many of these as I want. And for me to be able, with the push of a button, to freeze and unfreeze not only my credit file, but the credit files of my children, whose data has probably been exposed because apparently every social security number in the US has now been breached, which is great. Allow me to do that without having to fill out paperwork, without having to mail anything in, without having to jump through all of these hoops. And I think that we can have this because there is a very weak kind of prototypish version of this in the US called annualcreditreport.com, which is a single website, ironically maintained in a not a very nice way by the three credit bureaus, that allows you to go to a single place to request a free copy of your credit report. It hasn't been updated seemingly since like 2002. It's really old. It doesn't work very well, but like let's take that and let's build a much better version of that and make it easy for people to manage all of this stuff, given the fact that it's our data and we're headed into a world where supposedly consumer permission data is going to be the model that we use. So, like, why can't I
Yeah.
have this, Mr. Taylor?
The data breaches just get thicker and faster. The
The
consumer
most recent one was like every social security number. You're like, okay, cool. So, like, there's no more mystery now. Now we know all of our data has been exposed.
fun fraud fact. It's now a negative signal if you've never seen that data in a breach before. It's more likely to be a synthetic identity if it's not appeared in any breaches. So yeah,
Brutal,
like that's
brutal.
how your data is breached. Can we admit that the SSN is dead,
Yes,
and try and come up with something better? But
yes,
yeah, like consumer permissioned, it's my data. Let me get access to it. But with that service, if like what's that the wedge to ladder into? Because that
yes.
thing's got to make money. It probably doesn't want to be a charity. So what comes next is my immediate question. But I oh my goodness, do you know that feeling of like, why isn't this easier?
Yeah,
I think there's a whole blog series on like why isn't this easier? And there's a lot of
totally.
those things that generate a set of thoughts that take you down rabbit holes that go like, maybe there's an opportunity there. Because I think there's a certain type of fintech nerd that is not schlep blind.
Yeah.
Classic Paul Graham piece, schlep blindness. We accept administrative pain because we just don't see
Yes.
it. And
Yes.
and you, sir, are definitely not schlep blind. That was a schlep, and it needs fixing.
I as I was going through the experience, I was like screaming, and like my wife like came into the room and she's like, "What is wrong with you?" I'm like, This is broken. It doesn't work. This is stupid. It doesn't have to work this way." So I was losing my mind, and I would very much like to manifest something better. So with that, Simon, I've gotten that off my chest. I will now be able to be calm and productive for the rest of the day. You have to run to other things. I will let you go, but we will do this again soon. Thank you, as always.
Thank you, sir. Bye for now.